Hi, I'm Christian Easterday. I'm the CEO and Managing Director of Chili Ltd. We're a large copper developer on the Chilean coastline north of Santiago, developing the Costa Fuego copper gold hub, one of the largest undeveloped projects in the world that we are positioning for production towards the end of this decade.
Christian, good to see you here in not so sunny Toronto. This is week 2 of roadshows for you. How was BMO?
Yeah, look, it was busy.
Yeah.
It was busy. I believe they had a record number of attendees this year.
Yeah.
Obviously, one of the world's preeminent private conferences for the mining sector, and yeah, it was great to interact with some of the other CEOs and corporates and.
Well, it's companies of a certain size get invited to that one, right? Where people think
that's right. Yeah, it's pretty hard to get a ticket to BMO, and even the companies that get invited, they have one representative, generally the CEO, that goes. So, yeah, it's certainly a lot of value for Hot Chili to be invited. Firstly, with the market cap of where we are, so it really speaks a lot about, I guess, where the BMO crowd see the company going.
Yeah, and obviously now we're here at PDAC. It's a different sort of conference, a bit more sort of industry-led. What are you hoping to get out of this one?
Yeah, look, we're continuing with our engagement with the North American market. We're coming over to Canada, North America regularly now. So it's part of our PR campaign that we regularly do now. And this year we're being invited to speak at PDAC on Tuesday, which is fantastic. That'll be our first for the company. And also at some of the local events around PDAC with the Chilean events and seeing a lot of brokers and investors over here.
Yeah, yes, it's a good place to kind of see all the companies you want to at the same time. And then next week off to Asia.
Yeah.
Well, at least it's on the way home. That's good news.
Correct. Yeah, through New York and then into Japan, seeing counterparties over there on the Japanese side, which is fantastic. We're really sort of continuing to develop our relationships. As you know, Matt, we have a significant amount of concentrate that is available for offtake, and there's a significant amount of interest being shown in that. And also, for the first time, we'll be undertaking meetings on the infrastructure side of some of those groups.
Right. Okay. Well, that's you're out there marketing. People like what you've got and want to understand more. Next phase for you is trying to, I guess, piece this thing together moving forward. So you recently announced sort of upsizing of resources. Better tell us about that. Yeah.
No, there was a great job by the team. We were able to put together a couple of years of really infill drilling, geotechnical, metallurgical, hydrogeological, some extensional work around Cordillera and Productora, and really just putting the finishing touches on the resource base, which is now 85% measured and indicated, so very high categorization, a huge amount of investment, obviously, and that has us really sitting well for the delivery of our pre-feasibility later this year.
Right, and what does that put you in all categories in terms of scale?
800 million tonnes in the measured and indicated basket now, a further 200 in indicated. So combined, we've ticked over that magic billion-tonne number. But this is a huge bank of metal. It's some 3.6 million tonnes of contained copper, well over 3 million ounces of gold now. 100% of it will convert straight into our first reserves for the first combined reserve of Costa Fuego later this year. So, it has us, I guess, really ready now to take that final step towards that last phase, moving towards financing investment decision. That's the commencement of our bankable feasibility next year.
Right, okay. And I want to, I kind of want to do the numbers because it's going to enable us to have a better conversation around like how does this thing move forward and why is it relevant in the space, right? So bankable is coming up. You've got a plan as to how you best mine this thing. You've got a sense of where do you start, what are you aiming for? Can you tell us a little bit about that and why?
Sure. Well, as you know, last year, mid-year, we delivered our PEA on the project. That gave a shape to this thing. And it established us as one of 6 large-scale projects in the pipeline outside of the majors that has 100,000 tonne per annum of production capacity or above. So it's a very exclusive club that has this much exposure to copper. So we're one of those projects now. It's a combined open pit underground project that we took forward. We well recognised that Cortadera, our largest resource, could also be extracted by a large open pit without the requirement for an underground, but that is at a higher implied price. We optimise all of our economics on our mine designs around $3.30 and assess the projects at $3.85 in line with consensus forecast. So there's some optionality there going into the pre-feasibility, but this is a very large-scale project. It's extremely cheap on capital. It's half price to develop. And those advantages around a low operating cost at $1.33 per pound because of the low strip ratios on our open pit and the low elevation and no necessity to use desalinated water using raw seawater. We enjoy really competitive operational costs and capital costs down on the coastline. And we can see that in other developments such as Capstone to the north of us with their Manto Verde, brownfields developments, and even going into Peru to projects such as Mina Justa, which have been really, really star performers. So, it's a low-risk project that we're taking into pre-feasibility. It may be expandable. That is really a lot to do with the outcome of our growth drilling at the project over the last 12 months and going forward, and more importantly, also the completion of our consolidation strategy for the region.
Because you've got another 10,000 metres coming up, or planned.
We've got a 30,000 metre program that we're a little over halfway through.
Yeah.
We're pausing and continuing and pausing that project, navigating the markets, and we've got good cash at the moment. The equity markets are still depressed, and so we like to have a longer window where we are funded, and so that means we're progressing that drilling. We may even be doing some very interesting things on the geophysical front shortly that we're contemplating, and we'll announce if we decide to go that way. But no, that activity on growth is still continuing, and that's what our funding was put in place for with the investment from Cisco last year.
Okay, so growth is still important. I mean, you reached it, like you say, it's a good size, right? You got over that hurdle, as it were. People say,
I think, Matt, it's more about us being able to eye up another horizon of growth, and it's preparing for the environmental impact assessment, which clearly is the last thing we need to do on permitting. We've cleared all of the rest of the deck on maritime concession, land accesses on the coast, easement corridors, surface rights, etc., electrical connections. And that's the last thing that we need to do. So if we know that this project is going to be scaled up in the future, then we need to contemplate that within our EIA submission. And so if we submit that at the beginning of next year, as this currently scaled project, we're at circa 100,000 tonnes per annum of fine copper. But if we know that's going to be scaled up, we'll put that into the design on things such as tails, facilities, etc.
That's the rationale. Okay, makes sense. Okay, can you also, just coming back a bit, you make the difference between major for projects, and you're saying, well, we're one of the six largest outside of those majors. But what's the difference? I mean, copper is copper. Where we get it from? Is this because you're trying to say, well, potentially we're a good target now? Or what's the point of making that differentiation?
I guess, the majors have balance sheets, so they're able to develop these projects. I think Gary Nagle just recently said again at BMO a few days ago that, we'll develop our projects when the copper market is screaming, when the price is incentivising us, obviously. And there's a large amount of discussion on that at the moment, inertia from CEOs of major companies putting in capital at this kind of copper price. So clearly there's an incentivisation price, ahead of us. If we want to see the pipeline outside of the majors and the pipeline within the majors developed, it's not either or. We're all in this together. And so large capital deployment to solve this supply issue and this inelasticity, which looks like it's absolutely baked in. We don't see, in the last movement on copper where we moved to $5 per pound, not 1 ton of additional new copper supply came on. So it tells me that the incentivization price is actually a lot higher than what people would imagine. And so inside the majors, we're talking about 50 of the largest undeveloped copper projects on the planet. 38 of those are controlled by the majors. There's about 12 that are not controlled by the majors. And of those 12, there's 6 that look like they have the ingredients to go forward in the nearer term, in the next 10 to 12 years, be put into development.
I guess what I'm trying to work out is what I'm kind of investing into, because there's a bunch of variables there which may affect valuation on paper, and which is not necessarily the same as what someone's actually going to pay you. And if I'm going to invest into a company, do I want to invest in them at a point where they're just about to go and have to raise a ton of money, go through that slump period of building the goddamn thing out, because it's hard, right?
Yeah.
Things go wrong. All the while competing with the majors, who will also be incentivized with a higher copper price, and therefore, that will have a knock-on effect. They've got the balance sheets, they can crack on. You've got to raise the money, and that kind of affects your value for a short period of time. Right? Do you know you're having to do that dance?
Sure.
We're going to water in a second, because I think that could be the thing which helps or unlocks. It gives you options. We'll talk about it in a second. So, do you know what I mean? So in terms of what are you trying to do? 100, what are you, market cap?
130 at the moment.
130, 150 depending on the day of the week, right? And not a big balance sheet, with not getting the value that you want, and you've just positioned and said, right, the so what here is we're big, we're attractive. Someone might want to bolt us onto the reserve program, right? You've got to say, pick a route and say, we're trying to make ourselves look real pretty for these people over here, right? Or we genuinely want to get this thing built out because we think we've got this kind of water solution for ourselves and the district, and the money's going to be flowing like the water.
I think the latter, Matt. I think the latter, and I think that the...
But have you got to say that because you don't want to, you've got to keep competitive attention?
I think that the management group that has taken this forward for 15 years, a long journey. These things, as you know, take a long time to put into production because of things like permitting, and now, ironically, that is one of our greatest advantages. And you talked about the water. So, we looked at this, and this is well known. Junior's trying to build projects that are got capital profiles of $1 billion or more. Large projects is very ambitious. I think that some people refer to those events where they occur, where Equinox transitions into a producer or whatever example you want, that they're unicorn moments, and they only generally occur where the company has the ability to do it. And so if you look at our track record of the last 2.5 years, we haven't issued a single new piece of paper onto our shareholders, so zero dilution from a share issuance perspective. And that's largely about our strategy moving through this final period, which is often the component that will trip up 99% of companies. And whether you call it the valley of death or the orphan period of the Lassonde curve, Matt, which you know well, how do you navigate that? And, when someone says, well, how do you put together $500 million of equity side? That's 5 times where you are now. There's the dilution formula. It doesn't look attractive. And so you've got to look inward at the project, as we have on optionality. We put a very, very small royalty on the project last year, which has allowed our stock to be performing very well over the last 24 months on an upward sort of trajectory. And that's largely been about how we've navigated funding. And so going forward in towards this final phase and how we think about the actual financing package, we've embargoed and left alone all of our precious metal credits. So they're sitting there on streaming capability. We have 40% of our offtakes ready for the spot market and for other off-takers. And so we have a significant amount of concentrates 160,000 tonnes per annum in a very, very concentrate-hungry market with a premium product that has virtually no arsenic in it. And so that's a very attractive option for our financing. And then moving forward, even looking at what we're talking about, putting to work our water licenses and our water easements and our electricity connection and all of these things that are the makings of really a large multi-user
So explain the problem
supply
to people.
business on water.
Yeah, so right, but to the new folks looking in at this one, and maybe even some people who perhaps didn't take it on board when we spoke in September in Denver, explain the problem that companies, junior miners, are going to face with regards to the infrastructure around water.
Yeah, look, to round out what we were just saying, so when we look at funding $1 billion, we look at chopping down all of that equity side. So actually, what's left is very small in relation to the company's size, and that sort of solves your strategy as you move towards that. But right now, one of those options, water, which we just spoke about, firstly, let's just provide the context. Where we are is the southern Atacama. The Atacama region of Chile and Argentina and
Atacama Desert, I think people would know. So there's the clue.
Correct.
Big word,
correct.
Right? Yeah.
There has been changing regulations towards no extraction of continental water anymore in the Atacama. And that, if you look at the four reasons for why copper supply is going to be difficult to respond to new demand, about fourth down the list is water scarcity in the Atacama. And so it means that all of the new undeveloped projects are requiring saltwater desalination projects to supply fresh water.
Which is how far?
Most of them in the high Andes. Most of them at 3,500, 4,000 metres altitude.
And how far to the coast?
150 kilometres, but that's as the bird flies. Right. You see, the problem is the Andes.
Yeah.
And so one of the key reasons we've got a half-price project is we don't have that high-altitude pipeline to build. We don't have a desalination plant. But if we look at our licenses, we have everything that everyone else needs.
Mm-hmm.
And we have 6 major undeveloped projects, nearly 24% of new supply over the next 10 years, sitting in one spot in the world, in the Huasco Valley, and we look and investigate that, and we have the only active maritime concession to extract seawater. And the last time I looked, you need to be able to extract the seawater first before you could desalinate it. And so 10-year head start, 10 years it took us to put those licenses in place, means that we have the ability to unlock all of those projects 10 years earlier.
Right, and that's the key here. It's not just the cost of selling a pipeline from whatever 3,000-4,000 meters up in the Andes and down to the coastline at whatever, I don't know, $1 million a kilometer. I'm not quite sure what the cost is. The money's one thing. That's one thing, which is brutal. I'm sure people can find a way around that. It's that 10-year period before they can actually start doing anything. What are they going to do? Truck it up there? It's a difficult solution to solve, and it's not one that they can buy their way out or spend their way out of necessarily. So for you, give me that so what. So what can that mean for you? You've kind of got most of the permits and licenses that you need.
Yes.
To get to where you want it to be, and if they want to kind of plumb down to you, one, that's cheaper for them, but two, it solves their time problem, right? Is that it?
That's right. Time, firstly, is the number one thing that you've got to think here, because the amount of value that creates onto a project, being able to bring forward cash flow over that period. If we find ourselves in a copper price environment where it's saying develop and accelerate, then that's a huge option value to each of those projects. But on the capital saving, one pipeline, one desalination plant versus 5 desalination plants, 5 pipelines, is something that the government is fully behind.
Yeah.
This is their new big thing that they've been talking about in the press for the last 6 months, multi-user water networks to solve this issue in the Atacama. And so we just happen to find ourselves at that perfect time with the assets available that are scalable and transferable We have a second application going in for a desalination upgrade now, and we're now actively engaging with each of those 6 major off-takers and major infrastructure partners on a long-life potential business that could be set up of 3,700 litres a second. And it's kind of mind-boggling when you look at that, because we're talking about developing and focusing on building a big copper project here. And that's what Hot Chili is doing. This is by no means something that is turning our attention or defocusing us from that task.
Yeah.
But as long as we have water to our project, salt water, not desalinated water, salt water to our project by 28, 29, when this thing will require that water, then as far as we're concerned, if those licenses can be put to good work for Chile, for the communities of the Huasco region that we can supply water to, for 3,700 litres a second of new mining supply that brings forward all of those developments, and more importantly creates that perfect marriage of economic synergy with community synergy, with environmental synergy, with that power connection, this could be a 100% renewable powered project. And so, when you've got that together, of course it looks like a significant monetization opportunity for us and our shareholders.
Potentially bigger than the core project, potentially, right? So how do we view that? Is that something that you've got to take to a certain point and then spin out? Is that something that you flip because you want to fund the copper project? Do you prefer the annuity stream of that cash flow from the water project for as long as the communities and the other copper projects need it? How do you play it?
Yeah, look, I think firstly is about shoring up our interaction with the off-takers with capable infrastructure partners that have, obviously, Tier-1 infrastructure partners that have the balance sheet, that have the capability and know-how to build and operate these projects. Mostly in Chile and throughout the world, these are privately funded projects by a major industrial slice on utilities. And so, I think that those two are the next key steps for us as we undertake the business case study now that we've completed the scoping and, I guess, concept study. And so what is also, that we're aware of is that these projects are able to be advanced really rapidly, not in the timeframes that mining projects have. We will be in a very strong position at the end of this year and into early next year, probably with pre-feasibility numbers on this. And so then it's really about what are those monetization options that you discussed. Is it a spin out for the company and our shareholders? Is it all these assets put into an SPV and shareholders brought in, investors or infrastructure partners taking this on as a side-by-side equity partner in this? There are a number of ways that we can go, but really pleasingly, those discussions are underway.
Do you have, again, I know there's all the variables on the table and you've got a ways to go anyway, but how do you view the water in the context of the copper? Because if I look at some mines in Australia, they do like to report to me, say, we're a gold company, but we've got a nickel content in there, and which reduces our ASIC by $100.
Sure.
We've got a bit of copper, it reduces it by $25 on the, they use the other byproducts as a means of reducing the cost.
Of course.
And why I think it's important right now, so many CEOs are saying to me, there's a new economic reality out there, right?
Yeah.
The cost base has not gone back down to pre-COVID levels. It won't go back down to pre-COVID levels.
Yeah.
And in a gold context, ASIC going from like 1,000 to 1,250, right? That's sort of general consensus-ish, give or take. Yes, gold price is doing its thing, so ultimately margins are about the same. So good news there, folks.
Cost inflation being hit with price inflation, sure.
Yeah. So when you're reporting, saying, look, we've got a whole bunch of copper equivalent numbers in there, and yes, we've got the higher grade portion we're going to go for first, and so it's all good news. The economics in a copper context, you're saying it. You said to me at the beginning. Clearly, the incentive price for copper is going to move. The major thing that we think that everyone thinks, like general consensus, is that. But the cost environment has changed.
It has.
Yeah. So that's got to affect the way that you view potentially treating the water to allow you to report your copper project. Or you say, sod it.
I'd love to be able to report a water credit.
Well,
that would be a first,
though.
Matt. You know,
It would be a first.
That would be a first.
But so is a copper company owning a water company.
Yeah.
Right?
You've got this classic sort
It's
of
a commodity.
Macquarie coin situation where we've created two assets by punching out the centre of the first coin. So,
if you need the help,
interesting.
But if you need the help economically in terms of reporting your copper project in the early days, why not? Water's a commodity, sort of thing. You know, I just think you've got to think creatively in an environment like this.
And you can think creatively. Our chairman, Nicky Adshead Bell, and in several conversations, it was suggested that, you know, these are perfect opportunities for royalty revenue streams back to hot Chile. So, you know, there are a few things that we're thinking about, and the board probably hasn't finalised on where those decisions will be. There's a few more inputs into our thinking on the financial modelling that's going on at the moment. Once that's through, we'll probably start to circle around what those monetisation options are that we'll pursue.
Well, the revenue from the commodity, which is water, might be a way of, I don't know, keeping in check the costs. So it's the money we're focused on, not the water. But you get my point. Because, you know, what I noticed that like in the presentation, you don't talk about IRRs yet because you recognise that copper is, you know, perhaps not where it needs to be. But by the time you get to bankable feasibility, you are going to have to talk about that because the people giving you the money will be very interested in that.
Exactly. You know, the post-tax IRRs that are in the presentation and the pre-tax IRRs, when you look closely at the work that we've done on it, because everything's about context in this world. Mm-hmm. You can be disappointed with the grade of Costa Fuego or any of our peer projects for that matter at this scale, because we're all in the large space. We're representatives of 80% of copper supply in the world. And so these things are done on scale. And when you've got large scale, large capex, long life projects, IRRs at $3.85 as we show, you know, produce a spread of IRRs on all of these projects at anywhere, on the low end at 17%. And towards the high end at 27%. Right. So that's where these projects live at the moment in that copper price environment, you know. And then we look at post-tax NPV to capital ratios. Uh-huh. 4 projects with profitability indexes above 1. You know, you spend $1 billion, you get your $1 billion back, and you make $1 billion at least. The starting point for investment in large scale, and there's only 4. So it does show that. Why would capital be attracted to building projects with those kind of IRRs, profitability indexes? You put a $5 price on that, now you're starting to see IRRs approaching the 40s.
Well, that's good news. And the reason I said it, because we spoke with Arizona Sonora recently, and they put out a study. 15%. And the CEO's approach, George, was basically, well, get used to it, guys. That's the new world. Okay, get used to it. Clearly, we'll do some optimization. Clearly, we'll do some more drilling, but that is the new economic reality for you know, copper projects. So that's why I was wondering.
So Costa Fuego's IRR post-tax at 21 and pre-tax at 23, 24. I mean, we're sitting in the upper portion of those peer groups on IRRs, you know, which is good, and we're one of the few projects sporting a profitability index above 1. And that's all capital related. That's all because we've got a half price project, because the capital intensity, we're the lowest out of the large developers now. And so, you know, that advantage of low elevation and seawater processing has really given us a huge lift up.
It has.
And you know, that transforms into a 3.5-year payback. That's the third fastest out of this peer group. And when I say peer group, everything above 40,000 tonnes per annum of production potential on copper outside of the majors. So that's the sort of landscape that we sweep. And so Costa Fuego is certainly one of the better performers in that group.
No, an important point you make. I think Wyloo learned that lesson with Minco on their nickel transaction. They didn't quite get that right. Well, look, good to see you.
Yeah.
Enjoy. I don't know how you do it. I mean, 3 weeks on the road is ridiculous. Enjoy the meetings. I guess it helps when it's a positive meeting, right?
Yeah, and look, hopefully you have a great time in sunny Toronto while we're running around in the PDAC masses.
I'll see you over there. For sure. Thanks for your time.
Thanks, Matt.